Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about some of the best new year picks for 2020. These are long-term stocks that you can invest for the next 4 to 7 years and make a lot of money. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about the stocks that I have picked five companies, and these are all established brands and strong managements. They are diversified, yet they are market leaders in their own segments. So they are probably large and mid-cap stocks, but they are market leaders in what they are doing and in different industries. They have virtually no pledge whatsoever and very low debt to consider of, so that takes care of itself now. And strong institutional holding, which I'll describe with each stock that I describe later on in this presentation. And the return ratios are very good, and the profitability numbers are good as well in all of them. Hence, I have picked these five gems out of the 5,000 odd shares that are listed. So how you are going to invest into these companies? Well, you need to go, if you want to invest something like 15-20 lakhs, or you can divide it as 20% in each of these five stocks. So if you're investing 20 lakhs, then 4 lakh rupees each in each stocks. Buy over the next 3 years or so, or if not possible, sorry, 2 years or so. But if that is not possible, you can do it over the next year and a half, or even spread it over the next 3 years. Hold for 7 years more, and you'll see the magic. Don't look for immediate returns in these companies, because market can go anywhere because of external factors, because of domestic factors, etc. Hence, hold for 6-7 years at least. Should grow at easily 20% CAGR, but always keep a 30% stop loss from your average buy price when you complete the purchase. So the first value pick, or the first pick of mine from the list, is the very you can say earlier IPO, or the recent IPO that came in of IRCTC. Now the stock looks extremely expensive, and I agree with that, that the stock is currently trading at 40 odd times FY20 earnings, but they are a kind of a monopoly. So they are the leading train and freight carriers of India. They have monopoly in ticketing, monopoly in the freight business, and they are doing pretty well in the you can say, when it comes to price hikes, and doing well in terms of getting the orders from the government. They have strong DII and FII holding. The promoter holding of the government is pretty good, and there's only 6% of free float that is left with the retail consumers. So you have to take that into consideration. So the retail play in the stock is only 6%. So 94% holding is with the strong holders of the market, and which is very good, and that is probably why the stock is not falling a lot. The return ratios are beyond 20% when we look at it. This is a very good stock to buy on declines, and you can easily have a consistent stock growth of 20-25% over the next 6-7 years. So you can calculate the target from the current levels through this. So there's a consistent growth that we have seen over the last few years, and we have seen what has happened with the train fares, as they have increased quite dramatically over the last 5-6 years, and it will continue to increase. And remember that people in India, although they are traveling by flights a lot, but there are majority, at least 80% of the population travel by train. So train booking is taking place from the IRCTC sites rather than from the agents, etc., or going to the railway station. So, and that train booking business itself is around, I think, 2 to 3 million bookings a month they are, or a quarter they are getting. That is huge. So the moat is huge in this business, and that's why I'm recommending this, not at these levels. So probably buy on declines would be a better strategy to go by. My second pick is an interesting one. With the auto sector in total slump and auto ancillary not doing so well, and I don't recommend ancillary companies that often, but Motherson Sumi stands out, and more so because of its price at the moment and the kind of breakout it's showing technically, than the business itself, because the business everybody understands that it is one of the leading providers of auto ancillary products. They are the market leaders with top brands like big, you can say, companies globally having set up their you can say business with Motherson Sumi, and they take parts or auto parts from Motherson Sumi, whether it comes to CV segment or the commercial auto segments, passenger vehicles, etc. here in India as well as abroad. The major business comes from Europe, and the European economy is turning around. And remember that with the elections in Britain and the government coming back into power, the Brexit resolution looks like very close to happening. And once that happens, then the European business will pick up again. The kind of slump it has shown because of the uncertainty with the Brexit, that will go away, and we could see increase in profitability coming from the European business, and that would really help companies like Motherson Sumi and Tata Motors, etc. And hence, I've chosen Motherson Sumi because of the valuation. The stock was trading at 240, 250 rupees at its peak 2.5 years back. It has come down to below 100 some time back, few months back. Currently trading at around 145, 150, which is not very expensive considering that probably in year and a half or 2 years time things will recover in the auto sector. So I'm not saying immediately things would go up, and if you buy at 145, the stock will go to 180, 200. It could go back to 120, but these are the levels to buy at. So over the next 1 year, 1.5 years, you can accumulate Motherson Sumi at these levels and on declines, and probably see very good returns over the next 6 to 7 years in this stock. Don't overstay your welcome in such ancillary companies, but if you make 100 to 150% over the next 4 5 years, you need to book profits at that point of time. Automobile sector itself will recover in the next couple of years. I'm pretty certain of it, and this is how the cycle of automobile works over a 10-year period, and I have explained that in many of my videos when I have described about other auto companies. The stock has corrected, so as I mentioned, from 250 it has gone to 100, now at 150, which is reasonable. There's only 7% free float, so there's only 7% of retail play in this stock. 93% of the stocks are of the shares are with either with the promoters or FIIs and DIIs. So big players, HNI players, are into this stock even now with the results not being good. So you need to consider that. This will be back in fashion over the next, I'm sure, over the next 1 year. By the end of 2020, you'll see Motherson Sumi at much higher levels than what it is at the moment, and people will talk about this stock. Uh, Technically, it is showing a breakout. So 140 levels, 141 levels was a major resistance. It has crossed that, and on a weekly basis, it's closed above 145, 146. This augurs really well for the stock. So after Motherson Sumi, let's look at what is the next stock in my list. So the next stock in my list is Marico. This is an interesting company. Hasn't done so well over the last year, year and a half, and the company has not given a lot of big returns. It has not turned out to be a big multi-bagger over the last 8 10 years. It has grown consistently from 120, 130 odd levels over the last 4 5 years on a 15 to 20% year on year basis. But this is a very good FMCG company to look at, particularly because of the factor that HUL and other large cap companies like Dabur, etc., have done well over the last year and a half, but Marico has been left behind purely because of the numbers have not been that great. So I don't see the same kind of numbers coming in later on, because I see an improvement in the Marico numbers because of the kind of promotion that they are going and doing, and the new products that they are coming up with. They provide different types of FMCG products, and their major brand is the hair oil brand as well as the refined oil brand of sunflower and other healthy refined oil brands that they are coming up with. They have a lot of traction in the urban centers rather than the rural one, and this is particularly the reason why HUL etc. have done well, Colgate and so on, because the rural economy has done reasonably decently compared to the urban one. But I could see some changes in the demographical change in the economic framework coming in the next 2 to 3 years, because at the moment the Indian economy is in total doldrums, and at this point of time only the big wigs would do well, and that is what is happening with the FMCG sector. But as the economy picks up, which I believe would, I mean, no economy in India, well, the Indian economy has never grown at such a slower pace of around 4%, and this was probably the case around say 6 7 years back. So it's probably we could see a turnaround in a year and a half time, and this is the time to accumulate such stocks like Marico. uh, these are very attractive valuations at around 25 odd times FY20 earnings. Also, there's high institution and promoter holding, and remember, only 4% of the stocks are with the retail players, and this is what has really attracted me to the stock, that even though it has not done well on the basis of numbers, and the stock has fallen a lot over the last year and a half, something like 25 30%, yet the promoter holding as well as the FII DII holding has increased over time. So probably this is a very safe stock to get into. Doesn't fall a lot and gives you very decent return over a longer period of time. Completely debt free company, accumulate over the next 1 year, and probably you'll see the rewards when you hold on for another 6 to 7 years. The next stock in my radar is Page Industries, and you'd be surprised that I have put Page Industries here, because I've given a video a few weeks or probably 3 4 months back in which I have talked about Page Industries going lower, and probably you'll be able to buy it at around 15,000 16,000. Yet it did not fall that much. Uh, this this recommendation comes because of the fact that when I looked at the numbers of Page Industries over the last 6 to 8 years, the numbers for the last 2 3 quarters have been the worst in the last 5 6 years. That doesn't mean that the company is going down, or something bad is happening in the company and so on and so forth, or they are losing market share etc. They are gaining market share, yet the numbers doesn't look good, and that means that the economic revival is not taking place, and the problems in the Indian economy is hurting the numbers of such companies like Page Industries big time. And so it is still the market leader, it is still a boast of the highest market share, and and it is gaining market share over its competitors. So I believe that with the Indian economy, as I said before, that if it picks up and whenever things slightly improves, Page Industries would again start doing well, because people would not stop buying briefs and wastes and etc. They continue to do that. It's just that their preferences have changed, because this is slightly an expensive product compared to other local brands, and probably it is not finding favor when compared to local brands, because of the current economic situation here in India, because people want to save more. But when things change, they would be able to sell the most amount of products. It is similar with what is happening with TTK Prestige or other consumer companies. So this is the time to accumulate on any declines toward 18,000, 19,000. And even at current levels, with the escalation taking place in the Middle East and all, if the market falls, we could see very good levels in Page Industries to buy into. The management is very strong, and there is only 8% of free float again in this company, with high FII and DIA holding, a pedigree stock, a very good history. This is a very good stock to get into, and so this is the best opportunity to accumulate Page Industries. The last stock in my list of 5 gems for FY 2020 is Eicher Motors, and again you need to accumulate this stock over the next 12 to 18 months and do not hope for a major return at this point of time. In fact, the way the stock has fallen today, it seems like we could see another 4-5% decline in the stock very soon. So around 20,000 to 18,000 levels are very good levels to get into Eicher Motors. This has been a market leader in bikes, as we have seen with Royal Enfield. This has been a market leader with the CV segment, the commercial vehicle segment, and whenever the Indian economy picks up, this is going to boom big time. And even if that is not the case, even if private capex doesn't pick up, if the consumer sentiment changes and they sell more bikes, then Eicher Motors would end up doing really well. So these are the times to buy. Only 9% of free float with high institution and promoter holdings. So this is really good. If you buy, you'll be buying a very stable stock. Yes, from these levels, you could see a 10 to 15% correction. I'm not doubting that. And that's why I'm saying that you buy one share, probably 1 2 shares, or even if you are investing, say, something like 4 lakhs into this company, then you can buy one share at a time and then invest over a period of time, buying around 15 to 18 shares over the next 15-18 months. That's how you can go about it. The auto slump in India would turn around over the next year and a half, maximum 2 years from hence. Here we could see a total turnaround in the auto sector, and economic and infrastructure slowdown has also hurt the company with the CV sales going down, so keep that in mind. So these are good opportunities to buy, as I mentioned, with Page Industries. This is another stock which you can buy on declines, and this will be a champion one auto come back after a couple of years. So you'll see Maruti etc. do really well, Motherson Sumi, but Eicher Motors would lead this rally if and whenever the auto sector comes back after a year and a half. So keep that in mind. Buy on every decline and wait and buy over a period of 1 year to 1.5 years. So this was my video on the 5 major picks for 2020, and this is for a long-term time horizon of 5 to 7 years. Keep buying and keep investing. A very happy new year to all of you, and please be healthy, safe and sound all your life. Thanks a lot for watching.